Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, we're going to dive into developments in the DeFi ecosystem on the XRPL, Stellar, and the Hedera network. If you all enjoy these deep dives, do us a favor, smash that thumbs up button and subscribe. I cannot be more grateful. We have smashed through 26,000 followers. So again, without your help and without your participation and watching these video breakdowns, we could not have done it without you all. So we really do appreciate the love and the support. With that being said, let's jump in. So I said to you guys right off the bat, last bull market cycle in this post, XRP, XLM, Hbar had no DeFi ecosystem helping boost momentum like ETH did. That has all changed now for the first time ever. And I'm going to show you all developments happening behind the scenes in these ecosystems as we progress through this video breakdown. You have seen nothing but DeFi developments on the XRPL, Stellar, and Hedera. Buckle up, because this next bull market cycle will be different. Regardless if there is a utility run or not, the DeFi ecosystems alone on these three networks are about to explode in TVL over the next 8 to 12 months. Now, I wrote this for you all on July 15th. On the same exact day, on July 15th, Stellar put out on their X profile, the next era of DeFi is going to be powered by Stellar. And the Phoenix DeFi Hub right underneath of that commented on this, and Stellar gave them a little round of applause. And then just a couple of days after, on July 19th, DeFi Llama is now tracking the Phoenix DeFi Hub on Stellar.org, which was phenomenal to see. And then a couple days following that, Orchestra Finance is now also being tracked. So it says right here on DeFi Llama, now tracking the XRPL DEX, which is, again, just another phenomenal development to see. So with that being said, the reason why I'm explaining to you guys an exponential growth curve is about to come on these networks for these specific projects. If we just take a look at the TVL in the DeFi ecosystem that is locked, for example, on the Ethereum network, okay? You can head over to DeFi Llama and do this yourself. And this is something that we have been projecting, myself, Mr. Aqua, and some of the other Wealth 28 Club mentors like Mr. Man have been attempting to show you guys for some time now, since predominantly the beginning of this year. Looking at Ethereum, the TVL locked in the DeFi ecosystem is roughly around 58 billion. If we head over here and we just go to some other chains, just taking a look at, for example, the XRPL, right? It's peanuts in comparison, only $11 million in total value locked. You can go look at the Hedera network and you can see pretty much the same exact thing, $64 million. So imagine when Hedera or when the XRPL has $100 million or $500 million or even $1 billion in TVL locked over the next couple of years. In my personal opinion, it's only going to take another 8 to 12 months. But again, to each his own, do your own personal research. That's my speculative assumption. However, that just shows that there is massive room to the upside for growth, not only in these ecosystems, but also in the valuation of these digital assets, not financial advice. So with that being said, moving over to Hedera, they just announced this yesterday, July 25th, 2024, which I thought was phenomenal because it does show that Hedera is partnering with regulated entities, which just goes on to solidify Hedera's position moving forward in this digital asset ecosystem. So Hedera posted on X, with Hedera and Red Swan CRE, they are revolutionizing the world of commercial real estate. We'll get into that in just one second, with tokenization, democratizing investment opportunities by bringing increased accessibility and previously untapped liquidity into the legacy market. Now, we're going to play some video clips as to why this is so absolutely imperative that you all are paying attention to this. So if we head over here to this Forbes article, this is back from March 20th, 2024. In this Forbes article, it goes on to mention how real estate tokenization seems like it will significantly contribute to this growth. Market size for real estate tokenization was $2.7 billion in 2022, and the growth trajectory is set to reach $16 trillion by 2030, according to a report from Boston Consulting Group. So I want to take your attention over to this report. Now, again, take into consideration the TVL that I just showed you all on the DeFi ecosystems on these two specific chains, and take into consideration that Hedera just partnered with Red Swan, which we're going to get into in just one second, showing you all that they are a regulated entity to do what? to revolutionize tokenization of real world assets, particularly in real estate tokenization. Okay, so keep that in mind as we progress through this Boston Consulting Group document. So this right here, this portion of this document goes on to tap into something that I mentioned to you all in a post from yesterday, where a reputable individual from JP Morgan goes on to confirm how they are building out this infrastructure in order for them to literally lift and drop this old financial traditional system over into this new one using public blockchains.
Great panel with some really important institutions who are experimenting in crypto. So, Tyron, if you could give us some history about and perspective of the transition from private institutional blockchains to maybe more public, or what you guys are using today. And Eric, I know you have really interesting opinions on where that's going to go in the future.
Yeah, and maybe I can just provide a little bit of context in terms of just the traditional financial services market and how we think about the requirements really to be able to operate a safe and sound system. So JP Morgan processes about $10 trillion of payments every day. That's 400 times the global stablecoin daily volume. The global FX market is about $5 trillion. And so when we think about utilizing blockchains as a settlement layer, we need the infrastructure to actually support these volumes, and we need them to support the, the scale that the traditional financial services market is at. So right now, clearly, there are a number of reasons, both technological-wise, but also regulatory-wise, as to why we have to use permissioned blockchains. However, you can think about these, globally ever-present, always up, highly redundant public blockchains as a really, really attractive settlement layer that can, service this global market. However, until we actually solve some of the key challenges, specifically around privacy, specifically around things like AML, KYC, it does become difficult for us to fully step into that environment. We did a project last year with the Monetary Authority of Singapore where we demonstrated what it would actually look like for a regulated institution like ourselves to utilize public DeFi protocols, to utilize public blockchains. And very clearly, there were lots of very insightful learnings for us. The transparency that you get around DeFi pools, for example, the ability to have anytime price discovery through a DeFi protocol, very, very important and interesting. Also the lower cost. But as I said, until we actually have some clarity around the ability to actually operate on this infrastructure from a reg perspective, we're going to have to be in the sort of permission view until we can take some of the hybrid steps. And those hybrid steps look like some of the existing infrastructure that is coming out right now around subnets or permission zones or these kinds of things. And from our perspective, the reason why we operate an EVM sidechain is so that everything that we build can actually be portable into a public environment. So everything that we build can actually be portable into a public environment. So actually moving into the public blockchain environment when we can will be much of a sort of a lift and drop scenario.
And I'll get into that in just one second. And he also mentions DeFi. So heading over here, the document, this particular portion reads, JP Morgan, for example, intends to bring trillions of dollars worth of assets onto DeFi. You see that right there. It literally says onto DeFi, trillions of dollars worth of assets onto DeFi. Now, why is this so imperative that you guys pay attention? I posted this out to you guys the other day, mentioning that DeFi is the new wave. The goal of investing is to make money consistently. Most crypto investors are waiting around for their special digital asset to pop off, hoping and praying for new all-time highs overnight, when in reality, your crypto right now could be earning more crypto, stacking bigger bags for you while you wait for the next bull market cycle. Building a DeFi portfolio allows you to maximize yield-earning platforms that offer way more potential than traditional investments if you know how to properly use them. And here at the CYPRX Wealth 28 Club, we are again educating individuals on how to take advantage of these opportunities by exposing our own personal capital onto these DeFi platforms. Now, in this 1-minute video breakdown that I'm going to play for you real fast, I broke down for the Wealth 28 Club members how I deployed $3,000 worth of capital and making around 1% per day, which equates to roughly around $700 per month, ladies and gentlemen, on just $3,000 invested on this specific platform. Take a second and listen. What is going on, everybody? Today I will be uploading 3 brand new video breakdowns for the private Wealth 28 Club members, showing them a platform that I'm currently deployed on in the DeFi ecosystem, making me roughly around 1% per day on around $3,000 worth of capital, which equates to about $23 to $25 per day, or around $711 per month. Now, if that's something that interests you and you want to learn more about DeFi, come join us in the Wealth 28 Club. The vast amount of influencers out there in the crypto space have no idea that your digital assets could be working for you to some degree. Now, you don't have to take all your long-term holdings and deploy them into DeFi to get them working for you, but again, take into consideration earning in the now and not waiting around for some bull market cycle for gains in this market. If that's something that interests you, again, join our Wealth 28 Club, educate yourself on the DeFi ecosystem in the now so you can start earning and putting your digital assets to work. We would love to have you on the team. And here is a comment from an individual inside the club that goes on to say, just wanted to say that the research that you guys did in the walkthrough on the VFAT platform is awesome. Wow, cutting edge. You guys are awesome. Thank you for the hard work, keeping me at the cutting edge of what is set to be offered in the DeFi space. So just going to show you all that the individuals that are tapped into the education that we're providing in the Wealth 28 Club in the DeFi ecosystem are for a fact learning and earning. And again, I'm showing you guys this because these large financial institutions will utilize these digital assets in the future when they are allowed to, and they are building out the infrastructure in order to do so, right? And you can see that here, that regulated institutions like JP Morgan will be putting trillions of dollars of assets into DeFi. Why would you, at the end of the day, at a minimum, at least not like to get educated on what DeFi is, how to take advantage of it, and how you could be earning more digital assets in the now, building fatter bags for the next bull market cycle? Again, not financial advice, but just take that into consideration. And if you want access to over 75 video breakdowns going into detail on what DeFi is and how to get involved, then head over to CYPRXtrading.com. So back to the point. Okay, we're going to type in trillion here, and I'm going to show you all the projection that Boston Consulting Group made, where they go on to project, $16 trillion by 2030. Here's that projection right here. You can see the growth curve. 2026, they're looking at 5 trillion, 7.6 trillion 2027, and then by 2030, a growth curve of roughly $16 trillion and real-world assets tokenized by 2030. So the reason why I'm showing you guys this, again, take into consideration the TVL locked on these 3 networks that I just showed you all in the now, and think about that long term. Now, Hedera, back to this fundamental piece, just partnered with Red Swan and is revolutionizing the world of commercial real estate. We know, again, real estate set to expand, real-world asset tokenization to possibly $16 trillion by 2030. And now let's just take a second and look into this company, okay? This is absolutely insane, and in my personal opinion, just solidifies Hedera's role as a major player in this digital asset ecosystem moving forward. This is a piece from Red Swan CRE Marketplace from May 7th, 2024, just to show you guys that they are a regulated and regulatory compliant entity that did choose Hedera as a partner for real-world asset tokenization. This FINRA approval marks a significant milestone for Red Swan and Red Swan Markets, allowing them to legally offer and sell digital securities of commercial real estate shares from Red Swan digital marketplace platforms. This marks a new era for tokenized real estate as physically liquid asset classes, allowing for future integration into treasury management solutions. Investment managers will no longer have to classify all real estate as an illiquid asset, modifying the future investment benefit, accretive yield and liquidity options. Again, yield and liquidity options. These financial institutions do for a fact want to earn higher yield on their investments, and they can do so through DeFi, through real-world asset tokenization on these platforms like Hedera, okay? This FINRA membership approval recognizes our team's unwavering commitment and hard work, said Ed Equity, or I don't know how to pronounce that last name, definitely butchered that one, founder and CEO of Red Swan CRE. We can now expand our reach to a broader range of institutions, family offices, broker-dealers, RIAs, and money managers. And you just saw a document from Boston Consulting Group confirming JP Morgan is set to bring on-chain trillions of dollars over the next couple of years, and you heard the representative from JP Morgan confirm that that is exactly how they are building out the infrastructure now to literally lift and drop. That's exactly what he said, moving onto public blockchain blockchain environment. Tokenization will prove to be a game changer for commercial real estate capital markets, says Will Powers, president of Red Swan Markets. With the recent news of institutional adoption, we are extremely excited to be a part of this space and look forward to the growing industry with our partners. Now, if we head over here, another thing that I find interesting, it talks about on the redswan.io platform, the digital transformation of real estate. And here it talks about how massive the real estate industry is set to experience a major shift due to the integration of blockchain technology. But right down here at the bottom, this is what I really want you all to focus on. The digital transformation of real estate via tokenization marks a significant turning point in the industry. This transition promises increased accessibility, transparency, and inclusivity, potentially altering investment approaches, market dynamics, transparency standards, and risk handling. Embracing this transformative era could lead to more democratic and globally connected real estate markets, emphasizing adaptability and technological integration is a key element for success. The reason why I highlighted that is, again, because I have a firm belief that there is going to be an onset of individuals, just like people that knock crypto and say crypto's a scam and it's going away and it's all going to zero. It's the same thing in the DeFi niche. There's people in crypto that will knock DeFi and say that DeFi is a scam, when in reality, when you look further into it, if you understand how to mitigate risks like impermanent loss, and you understand how to check the right platforms by looking into the audits that these platforms provide and so on and so forth, you can mitigate your risk and build a mature DeFi portfolio and take advantage of these yield-bearing opportunities now to grow your wealth and expand your long-term backs. And there's going to be people in this space, i.e. Wealth 28 Club members, that take advantage of these opportunities, and individuals that sit sideline and don't. So again, integrating these new technological transformations, having the ability to be adaptable, is a key element to success. And I just thought that that was interesting coming from redswan.io. So last but not least, this was an interesting read from the Hedera.com website, where they go on to talk about Red Swan and why they actually chose Hedera. So I have some highlights for you all. This is going to be the last piece of this video breakdown. And so right here, it goes on to say, Red Swan's decision to build on the Hedera network was driven by several key factors that align with their mission, i.e. Red Swan, to revolutionize real estate investments. First, Hedera's consensus mechanism offers superior high-speed, security, and efficiency compared to traditional blockchain networks, making it ideal for handling complex real estate transactions. Second, the network's low predictable transaction fees were a crucial consideration for Red Swan, as they enabled fractional investments without prohibitive costs eating into returns. Now, I like that they mentioned fractional investments. Take a second and listen to this panelist say and talk about how in this new world of real-world asset tokenization, it allows the ability for a normal, every average day individual that did not have access to these markets beforehand, the ability to tap into fractional investing and buying, for example, real estate in small micro amounts that, again, they never had access to before. And that is all now readily available through blockchain tech, real world asset tokenization.
That you would create fractional ownership of things. That was a pretty advanced form of RWA. So it's just a very logical idea for me that you would create fractional ownership of things that can't be fractionally owned today, because the people that have the asset, they want liquidity, and the people that want the asset, but they don't have the capital to buy the entire building or something like that. There's like a whole bunch of assets at the edges of the financial system that can't be purchased, can't be owned, can't be fractionally divided. So that was interesting. And then there's also all kinds of dynamics I've discovered about real-world assets over the years, where they create a lot of economic efficiency for things like collateral management. So atomic settlement allows you to move assets very quickly, and so you can earn interest on the asset for longer, and that matters if the asset's worth $100 billion.
So Hedera's growing ecosystem, as well as the network's governance model, which is backed by global leaders in diverse industries, also provided Red Swan with confidence in the network's long-term stability and growth. Last but not least, it says, finally, Hedera's highly respected international reputation and established partnerships have supported Red Swan's global expansion efforts, enabling easier entry into new markets and regulatory environments. So the three main takeaways I have from this highlight right here is superior speed, security, and efficiency, long-term stability and growth, and regulatory environments. This, in my personal opinion, just solidifies Hedera's position in this digital asset ecosystem moving forward. Now, none of this is financial advice. I'm not telling you guys to go out there and put your hard-earned money in the DeFi ecosystem. But with all of that in mind, you all should now be able to see that DeFi is the new wave. We're not making this stuff up here at CYPRX. These large financial institutions like JP Morgan, where confirmed on a Boston Consulting Group document, is set to put trillions of dollars into the DeFi ecosystem, is something that you all should be paying attention to and at a bare minimum seeking to get educated on here at the CYPRX Wealth 28 Club. If you guys want access to that, again, visit cyprxtrading.com. We'd love to have you on the team. DeFi is for a fact the new wave, and these three ecosystems moving forward, the XRPL, Stellar, and Hedera ecosystems in the DeFi space are, in my personal opinion, going to grow exponentially in terms of TVL over the next 8 to 12 months. So make sure that you all are not missing a beat on the ongoing developments in these three ecosystems moving forward. Many blessings to you guys. If you enjoyed this video breakdown, do us a favor, smash that thumbs up button and subscribe. We do appreciate the love and the support. If you guys have any questions about the CYPRX Wealth 28 Club before joining, the customer support email is in the description down below. Reach out to me. I'd love to hop on a one-on-one call with you and answer any questions that you may have. With that being said, as always, be cognizant, be aware out there, and I will see you all in the next video breakdown.